Hello everyone, and welcome back to the channel. Today, we have a massive update on everything XRP, from the launch of new ETFs and the wild market reaction to a huge liquidity crunch on exchanges and major regulatory news. You are not going to want to miss a single second of this, so let's dive right in. First up, the big news everyone's been waiting for. The 21 shares XRP ETF, trading under the ticker TOXR, officially launched today. This brings the total number of active spot XRP ETFs in the market to 5. The launch was met with a flurry of activity. In the very first hour of trading, the combined volume across all these new ETF products, including those from giants like Franklin Templeton, Bitwise, and Grayscale, soared past $13.2 million. A few hours later, that number had already climbed to around $30 million. This shows a clear and immediate appetite from institutional players. However, the broader crypto market didn't share the same enthusiasm. We saw a pretty sharp dump across the board. Bitcoin dropped around 6 to 8%, and Ethereum fell even harder, down 7 to 10%. What caused this? It looks like a classic case of buy the rumor, sell the news. Large-scale selling from both institutional and retail investors, who were likely concerned about short-term volatility, triggered a cascade effect. This led to the liquidation of approximately $600 to $650 million in leveraged long positions. It's a harsh reminder of how volatile this market can be, even in the face of positive news. Now, let's talk about something incredibly significant happening behind the scenes. A massive depletion of XRP liquidity from exchanges. This is a story that has been developing for a while, and the numbers are just staggering. Data shows that since February of 2025, a jaw-dropping 6.45 billion XRP have been moved off of tracked exchanges. That's a 28.62% drop in the total supply held on these major trading platforms. Think about that for a moment. Over a quarter of the XRP available for quick trading has simply vanished. The situation is even more dramatic when you look at US-based exchanges. Platforms like Coinbase are now described as virtually empty of XRP. Their holdings have plummeted by an incredible 99.93%. It's the same story for Gemini, Kraken, and other US-based exchanges. They have been drained of their XRP supply. So, where is all the XRP? Well, the Korean exchange Upbit is now the undisputed king of XRP liquidity. They are currently holding about 6.18 billion XRP. Which accounts for roughly 38% of all XRP held across all tracked exchanges. This concentration of liquidity on a single foreign exchange is a major market dynamic to watch. What does this massive withdrawal of XRP actually mean? The implications are huge. It strongly suggests that these coins aren't being sold. Instead, they are being moved into private wallets for long-term holding, shifted into secure custody solutions, or being locked up for use in DeFi protocols and other utility-based applications. This drastically reduces the immediate selling pressure on the market. When there's less XRP available to be sold on a whim, it creates a much stronger and more resilient holder base. This is the foundation for a potential supply shock. This leads us to a crucial point about XRP's future price. Many analysts are now saying that any price discovery above the old all-time high of around 340 will not be technical, but structural. What does that mean? It means the old charts and patterns might not apply anymore. For the first time in its history, XRP is trading in an environment with institutional inflows via ETFs, growing regulatory clarity, and a global transition towards distributed ledger technology for finance. This is uncharted territory. The rules of the game have fundamentally changed, and that's why this liquidity crunch is so important. It's setting the stage for a completely new kind of market. Next, let's shift gears to the regulatory front because there's some exciting news here as well. The U.S. Securities and Exchange Commission, the SEC, has scheduled a very important meeting for December 4th. The topic of discussion? Updates to corporate governance rules and how asset tokenization could be integrated into traditional equity markets. This is a massive step forward. And look who's coming to the table. The panel for this meeting includes top representatives from Coinbase, BlackRock, Galaxy Digital, and Robinhood. And it's not just crypto firms. Giants from traditional finance like Nasdaq and Citadel Securities will also be there. This shows a serious, high-level effort to bridge the gap between digital assets and the established financial system. The goal of this meeting isn't to create brand new rules overnight. Instead, the focus is on figuring out how to integrate blockchain technology into the existing securities framework. They are laying the groundwork and building the foundation for future regulatory guidance on tokenized securities. This is how real, sustainable adoption happens, not through sudden decrees, but through careful, collaborative planning. And we have even more positive news for Ripple. The Monetary Authority of Singapore, or MAS, has just approved an expanded scope of payment activities for Ripple's major payment institution license in the country. This is a huge vote of confidence from one of the world's leading financial hubs. This expansion will allow Ripple to scale up its licensed payment services and cater to its growing customer base in Singapore and the wider Asia-Pacific region. This is another example of Ripple making real-world progress and expanding its global footprint, license by license, country by country. This is the utility that will underpin the long-term value of the network. Finally, let's touch on some price predictions that have been making the rounds. Many of you have probably heard analyst Chad Steinreber's bold prediction that an XRP price of $250 is inevitable. Now that's a number that gets everyone excited, and it's based on the idea of a massive global wealth transfer onto the XRP ledger. While the fundamental reasons for such a valuation are compelling, especially with everything we've discussed today, it's also important to manage expectations. Some are suggesting that these higher price targets, while possible, might be pushed a bit further into the future, perhaps into 2026, as the institutional infrastructure and global adoption continue to build out. The key takeaway is that the long-term outlook is incredibly bright, but it will be a journey. So to recap, we have new XRP ETFs launching and drawing in institutional money, a historic liquidity squeeze that is taking billions of XRP off the market, and major progress on the regulatory front with the SEC and key players discussing tokenization. On top of that, Ripple continues its global expansion with a new license approval in Singapore. The pieces are all falling into place. The short-term market might be volatile, but the long-term structural changes are undeniably bullish. That's all for today's update. It's an incredibly exciting time to be in this space. Thank you so much for watching. If you found this video helpful, please give it a thumbs up, and make sure you're subscribed with notifications turned on so you don't miss our next deep dive. Let me know your thoughts on all of this down in the comments below. Until next time.